Alright, Pack, welcome back to another video here on the Dividend Doggo Show on YouTube, and I am bringing you in for the weekly portfolio review. We are going to be going over the M1 Finance portfolio a little bit here today and showing you exactly how we did for the week this week. As you can see here, we're at about $193,000 in total gains, of which the market gains are about $139,000, and the earned dividend income, which is always going up, is at $53,510 so far. So this portfolio has been around since August 6th of 2019, and this portfolio is funded by real estate assets and W2 income. And it is primarily, the goal is to get to about $80,000 a year in dividend income to pay all of the bills so that we can basically perform F.I.R.E. and be able to live financially independent and not relying on W2 income. Be able to do whatever we want for income or for fun or for charity as we go. So through the later half of life, right? We are, my wife and I are building out this portfolio. We're in our late 30s, and we are hoping to build this up within the next like 10 to 12 years before we hit 50 to be able to provide us that income. So let's dive in. We've got a bunch of new viewers to the channel, which is why I wanted to kind of open up with that and kind of describe to you a little bit about what the portfolio goal is and kind of go from there. So let's break down and look at these green numbers. Holy green Batman. So for the total for the week, we had very little in dividends come in, only about 10 cents. However, the market gains this week were $16,251.52, which is pretty staggering. 3% green week after what feels like months of red weeks is feeling really nice. Everything's looking pretty good here across the board. So let's dive straight into the first category here, which is finance, and let's take a look at that and see. So overall, it looks like T. Rowe Price had the winning top there with 5.11% for the week. Then we have Bank of OZK up 4.9, Bank of America up 4.52, JPM up 4.80, and Citigroup up 3.75. So overall, I believe T. Rowe is the only one that's still... Nope, T. Rowe is in the green for all time right now. That's pretty fantastic. All the way across the board, it's actually green. So that is pretty wild. I had taken the dividends from C that just rolled in a few weeks ago, and I put them into SCHD last week, I think. And that is absolutely amazing to see everything up and in the green, especially after the announcement that the Fed is going to continue to bump interest rates until inflation is curbed. So I don't know. I'm not sure how long that's going to take. I think that's the big gamble on everyone's plate right now. So let's take a look at this. The consumer pie was up 2.33%, or $3,145.95 for the week. We've got about 1% of that, 1.27 is Mo Altria Group. That's $739 of green right there. Home Depot was up 2.7% this week, or $547. Coca-Cola up 1.9%, or $389. Costco up 3.37, or $423.84. This makes me happy because I just went to Costco on Friday and spent a whole bunch of money there. The dogs are going through a little over a bag a month of the 40-pound sweet potato salmon Costco brand dog food, and then I actually got a replacement bed because one of the puppies had an accident in the bedroom. We've been letting them sleep in the bedroom because it's been pretty hot here, and that's the only room that we have actual AC in. We have a window AC unit set up. The summers here generally don't get that hot, where you only need AC a couple days out of the year. So the actual house itself doesn't actually have AC, which again is an interesting concept coming from Texas, where every single house has to have AC to survive. But so yeah, Costco spent, I want to say, about $200 and stuff there. About 100 of it was dogs, and you'll hear them in the background barking. So then we have Lowe's. Lowe's was up 5.19% for the week, $547. That is pretty phenomenal for Lowe's. And Target up 5.5% there at $418 for the portfolio. I'm kind of regretting not getting some more money into Target while it was really cheap. They had the overbuying shenanigans, and I think that they were a little bit oversold. Same with Lowe's, to be honest with you. I think Lowe's is another one of those that is going to be easy to see this value grow over time. PepsiCo, I love my snacks. I love a lot of the Pepsi products, but mainly the snacks. So seeing Pepsi go up about 1.5% is fantastic. I think that we're going to continue to see like 6 to 8% dividend increases from Pepsi. I've noticed that the bag prices on chips have gone up pretty substantially up here in the Pacific Northwest. That kind of leads me today to kind of the question of the video is, what is the thing that you have most noticed the inflation increase on? Is it meat, or is it snacks, or is it something else? Because for me, our biggest increase is property tax. And that's like, I don't really want to talk about how many properties we have, but the property tax alone is pretty significant. It's more than right around the median salary for American households. So that is just in property taxes, and the increases between Texas, Washington, and the other states that we operate in. Everywhere else was cheaper than Texas and Washington state, but holy cow, are the property taxes, the increase is just absolutely staggering. I'll be shocked if there are not other homeowners that comment on that down below. But yeah, property taxes was definitely our highest inflationary increase for our spending. We're relatively frugal though, so I'm super curious. Drop me a comment down below and let me know what it was for you, what you think the inflation was the highest for your bills. And so let's jump into the Como Money Pie. Both Berkshire Hathaway and SCHD both doing very good here. Overall, they're looking very, very good. 3.11% increase for SCHD this week. That's $3,673 in capital gains. And market gain. Berkshire Hathaway right below that at 2.92 for this week, or $382. That's pretty phenomenal for both of them to be pretty in line with each other. This is, SCHD is the one big index that I want to hold in this particular portfolio because it's so dividend focused, and it's just full of pretty high quality companies all the way around. I just don't want to have to worry about it or spend too much time digging into what stocks to invest in. I just want a huge chunk of the money to go to that, and then that to compound. So let's go into healthcare here. Healthcare was up 3.59% between the two companies, or $2,415 for the week. That's AbbVie. That holds a huge chunk of this particular pie. And that's $2,300 on AbbVie alone, 3.77%. Then we have Johnson & Johnson at 1.83% and $115 in green for the week. Both of those doing very well. Then we have utilities. This is Duke and Vistra, VST. A few months back, I trimmed down the position in VST, and we are now just playing with the gains from the stock. So this is pretty phenomenal that this is sitting at $49,000. This is 1.6% or $563 for the week. And Duke actually was up pretty significantly, 2.69%. That's pretty wild. Both of those doing very well for the week. Then we have our monthly dividend stocks. This is mainly just BST, which was up 3.83%. I had been buying some extra shares of this while it's below the cost basis. I'm going to jump into this one real quick because it is getting closer to my cost basis. We're at about 35.50. So for the next couple months, you can expect me to at least be rolling in the dividend from BST to buy more shares. Right now it's buying about a share every single month. Just on its own compounding, and that's absolutely phenomenal. I do actually really like this stock overall. However, the expense ratio is one of the key complaints that I see online about that stock. However, I do believe in big tech. We've got a lot of our money in tech in 401k funds. So overall, I like it. I like it a lot, and I think the stock's definitely got some downside to it and some negatives, but overall it's a very, very tiny portion of the total portfolio. So I feel very comfortable reinvesting the dividends. Now, pretty wildly, the owner's rewards pie, this is just for the credit card rewards through M1 Finance. I would not recommend investing in any of these companies without serious due diligence. However, I wanted to just skim over this and look at some of these numbers. Obviously, Amazon had a great week, but look at Chipotle, 6.6% this week. Chipotle was up. That is wild to me to see that type of number in 1 week. Delta Airlines up 5.7%. Uber up 9.43%. American Airlines up 9.24%. Starbucks up 6.9% for the week. I got to double check, make sure we're on 1 week returns. Holy cow. So Best Buy up 7%, GameStop up 5%, Chewy up 9.88% on the week, Airbnb up 8%, eBay up 2%, Adobe up 7%, Nike up 5%, Spotify up 5.59%, Lyft. This is the one that I was like, what? Lyft and DoorDash. Lyft was up 23% for this week. That's just absolutely wild to me. And DoorDash up 10.5% for the week. Now, the only reason I have this stock, like this fraction of a stock, is because of the owner's rewards pie. But holy cow, is this pretty wild to see this up. I've got 0.63 of a share, but that's pretty wild. 1 week returns on Lyft. So is there anything in your portfolio this week that shocked you? I'm just kind of staggered by those. I wanted to show those off just because I was like, that's just wild. I did not see any news or anything on Lyft, but that is what it is. So I wanted to showcase and show you exactly how the portfolio is doing for the week. So overall, very green week. It makes it hard to want to reinvest dividends or any additional cash when you're seeing numbers spike up like this. But I am going to build this up to about $2,000 and then do a relatively decent buy of something. I might put it across several stocks. We'll have to see kind of where it goes from there. But thank you very much for watching. This is the weekly portfolio review. And if this video gets, say, 25 comments over the first 2 or 3 days that it's up, I'm gonna release a special video about net worth on the next probably midweek this week. And let me know if that's something that you're interested in down in the comments below. I just plugged in a net worth checkup for the year to see kind of where we were at for stocks and high yield savings accounts, IRA accounts, checking, 401k, that type of stuff. So let me know if that's something that you want to see on the channel. I haven't really disclosed that type of information before, but that would be kind of where that goes from there. So thank you very much again for watching. Thank you to all of the new subscribers, and I hope that this portfolio view gives you some inspiration, and that you go out and you start investing, or pick a few stocks to go and invest in. Always do your due diligence and know what you're buying, especially if you're buying index funds. Know what stocks they hold and what you're going to be paying for them to manage those stocks for you. But I appreciate every single one of you, and have the best weekend you possibly can.